Hawkish Fed in the driver's seat, dollar jumps. Global equity markets were mostly higher on Monday, with investors staying cautious as the Russian-Ukraine conflict escalated over the weekend. In individual stocks, Twitter jumped 27% after the company said that Tesla's Elon Musk had taken a 9.2% stake in the social media platform. It was the biggest pop in Twitter's history since its IPO. Asian equity markets extended the advance on Tuesday to reach 5-week highs, with the S&P/ASX 200 index gaining 0.2% after the RBA left the interest rate at a record low of 0.10% to express optimism about the economy and rising wages. The central bank also dropped its patient stance on inflation, shifting towards a more hawkish tone. However, as investors proceeded to more cautious trading, rising geopolitical tensions surrounding Ukraine, coupled with another hawkish message from the Fed, pushed Wall Street indexes lower on Tuesday. Leo Brainerd indicated that the central bank could take a more aggressive approach to its tightening policy, including a rapid balance sheet runoff, while Daly said that the case for a 50 basis point interest rate hike has grown. As a result, the Nasdaq Composite led declines, losing 2.26%, while the Dow Jones and the S&P 500 gave up 0.8% and 1.26% respectively. Following suit, Asian equity markets slipped on Wednesday, digesting the rising possibility of an even more aggressive monetary tightening in the United States in the months ahead. Adding to investor worries, Deutsche Bank warned that a U.S. recession is ahead. The MSCI's broadest index of Asia-Pacific shares outside Japan skidded 1.4%, retreating from 5-week highs seen a day earlier. Japan's Nikkei 225 gave up 1.58%. In Europe, equity markets closed lower against the backdrop of further sanctions against Russia. Breaking a 3-day winning streak, the Pan-European Stock 600 provisionally ended down 1.6% to log its worst day in nearly a month, with travel stocks leading the losses. On the data front, German industrial orders fell more than expected in February on weaker demand from abroad. Elsewhere, the ECB Vice President, Luis de Guindos, said that the financial stability impact of the war has so far been relatively contained in the Eurozone. Wall Street stocks fell for a second straight day on Wednesday after the Federal Reserve gave more details on how fast it will tighten monetary policy, raising concerns it may slow the economy. The Fed's meeting minutes indicated that officials generally agreed that it should shrink its balance sheet by $95 billion per month. After a bounce from session lows, the Dow Jones finished 0.42% lower, the S&P 500 slid nearly 1%, and the Nasdaq Composite sank another 2.22%. In currencies, the US dollar notched its fifth bullish session in a row on Wednesday to register a fresh May 2020 high of 99.77 as the yield on 10-year Treasury notes continued to rally amid hawkish Fed. The FOMC minutes have heightened the odds of an aggressive monetary policy in May, thus pushing risky assets under pressure. Amid the resurgent safe haven demand, the USD index is now heading towards a psychological figure of 100.00. On Thursday, USD index corrected lower towards 99.50 amid local profit-taking after a rally. Hawkish comments from the Fed sparked a sell-off in Asian markets on Thursday, with the COVID-19 lockdown in China also weighing on market sentiment. The MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.53%, and Japan's Nikkei 225 dropped 1.69%. China's stocks fell nearly 1% as Shanghai reported over 19,000 new cases on April 6th. South Korea's Kospi declined 1.4%, and Australia's S&P/ASX 200 gave up 0.6%. In other markets, oil prices peaked at just below $110 a barrel earlier in the week before retreating to mid-March lows seen around the $100 psychological level. The International Energy Agency member countries agreed to release another 60 million barrels on top of a 180 million barrel release announced by the United States last week to help drive down prices in a tight market. Also, Brent crude was under pressure by the EIA data, as the report showed that the U.S. crude inventories increased by 2.4 million barrels for the week to April 1st, compared to a draw of 3.4 million barrels for the previous week. After bouncing off the round mark, Brent has settled around $102 a barrel early on Thursday. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.